Good morning to all traders and welcome to this market insights video on FX majors. It's Tuesday, the 21st of July, and Monday was just an amazing session. We've seen everything going up against a weaker dollar pretty much. There is this incredible move on the pound that I want to start with, of course. That's because in the UK government actually signed a deal with a number of bio companies, and naming one is the Pfizer, of course, to receive vaccinations, possible vaccinations that they are showing positive results. And we're talking about nearly, I think, 90 million doses, and that was taken very good from London traders, and that's despite the fact the UK has suspended now Hong Kong extradition treaty indefinitely, as well as the fact that markets were expecting really the EU/UK talks to begin, and they're not really looking at those with a positive view, I would say, positive outlook. So they have discounted everything negative at the moment, and markets are moving up, which seems to suggest that maybe this rally will be short-lived. Now, at the same time, the European leaders agreed finally on a recovery fund of 390 billion coming as grants. That was a sticking point. If you remember, last week we talked about Germany and France wanting about 500 billion. Then the Frugal Four suggested 350. Well, they found a balance at 390. It's not a balance, but anyway, the deal is done, is struck. Positive news there as well. At the same time, demand for iron ore and other resources increased from China, and that seems to be supporting the Aussie going ahead. And QE, of course, follows that narrative anyway, supported at the same time. While in the US, we have really debates between Democrats and Republicans about the unemployment benefits and whether they should stop providing $600 a week, because it's really adding up into the debt and is really maybe even allowing people to keep claiming jobless benefits that they are also expected to rise, and they keep rising actually week on week basis. Now the thing is that we've seen a positive sentiment as well in the US, or equities have been supported, of course, but overnight as well, we had Trump's administration signaling that they would begin talks for an additional $1 trillion economic aid. So everything goes up, dollar remains weak. We are going to start with the pound first. So pound, if you remember, I see this as an ABC in the cycle degree, a simple correction. Now that to me looks like, because of its corrective sort of pattern, not corrective, it's just that because the waves 3 and 4, waves 1 and 4 interact with one another. The wave 4 is penetrating wave 1. I see this as an leading diagonal, okay? Which means I'm expecting prices to go above 130 or in 130 and then start moving lower in the medium term. Now, how that's going to happen? Well, we've had waves 1 done, it looks like to me. This is wave B, and we have 1, 2. It seems that we're going to have a multi-structural move to the upside over here. Then again, a sharp 4 and 5 to take out wave 1. So we have some positive outlook here in our mind in the medium term, and I'm going to expect fresh highs above the 128.16 at least. Okay. Now on euro dollar, on euro dollar we talked about last week this possibility of this being an expanded flat. We were expecting prices to return down here. It didn't happen. So until, I mean, we could literally go up to 115.24. This is the 38-point Fibonacci extension of waves of wave A pretty much. So, and the Fibonacci extension on the downside will bring us to around 110. So until we go to 115.24, I would expect that test, of course, to be to form an expanded flat. In case we break above, then that means that this is 1, 2. Multi-structural wave 3, 4, and we're going to see more upside, breaking the 116 and perhaps even higher. The other scenario is that we've ended over here This is not an expanded flank. This is wave 5. This is some sort of triangle, right? So we've got 1, 2, 3, triangle 4, and ending diagonal 5. And then we move lower, well, for fresh lows below 106. Now, what should we do? Let's go on dollar yen. Dollar yen, very good confluence levels everywhere here. Okay, so I'm looking, here's what I'm looking, right? I'm looking at this as a triple zigzag, right? So W, X, Y, X, and Z. So we've done waves A and B, and we're in the midst of wave 3. I see this as a 1, 2, 3, 4, and 5. Now, if you look at these confluence levels, they are amazingly bringing us to 105.15, all of them, 78.6 of A and B, the 161 of 1 and 2 over here, as well as the 61.8 Fibonacci of wave W. Okay, so this is a very, very good confluence level. And wave 3 looks to me like it's going to go around the 106, which is the 100 Fibonacci extension of waves 1 and 2. So I'm expecting more downside. I don't want to see these, I mean, these, you can move higher, but I don't want to see this going over 108. This would start invalidating the scenario to the downside. Okay. And let's have a quick look also on the Aussie. Aussie, also moving up along with everything else. Well, you remember 3, 4, and 5 for fresh lows? A, B, C. Still, we haven't ended wave C. We've done waves 1, 2, 3, and 4, and we're in the midst of an ending diagonal. It looks like to me, wave 1, 2, 3, 4, and 5. What if we ended around the 78.6 Fibonacci extension, which is the 71.96? And this is also very close to the 78.6 Fibonacci extension of waves 2 and 3 and 4 level. So I'm looking at a fresh high regardless, above the 70.64, and then I will start looking for signs to go into a short position that is going to bring us perhaps, right, below the 0.55. Of course, there's other scenarios here. That could be a 1, 2, 3, 4, and 5, and then we just have a correction down here and shoot back higher. Thank you very much for watching, and I will speak to you again tomorrow.